everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand tomorrow. And today we're taking a look at the ZB, the good old 30-year bonds. Now, the 30-year bonds, if you're not familiar with them, they're a very slow market. They're not something that moves really, really fast or anything like that. It's a slow, grindy kind of market, very similar to the S&P. So when you're trading, you have to keep that in mind. Patience is definitely a virtue when you're trading the bonds. Now, first of all, looking at yesterday's movement, fairly range-bound. It started to break out towards the highs near the end of the day, but all things considered, it ended up just kind of coming back and closing back on down on top of the little swing high that formed earlier in the morning. Now, with this type of formation, it's obvious that the buyers want to give it a shot, but, they really need to show up and prove it. And we opened up this morning with a gap higher, and that gap higher gave the first candle of the day as a lot of strength. A big bull candle, all of the wick on the bottom, and closing on its highs. Very strong candle. Now, this is the type of trade that will fire off every once in a while. It's what you would call a bar one swing. It's the first candle of the day. You don't have a ton of information to go off of other than pure context. Now, that makes it a very aggressive trade, and a lot of times, for me personally, I would rather wait for a little more information. But a lot of traders love these bar one swings to try to get it going, and sometimes that can be the low of the day. It might never come back, so you can catch some huge moves if you catch it on the right day. Most of the time it's not, but just pointing it out, there was a very nice opportunity to go long right there on the first candle, looking for continuation to the upside. Now, for me, again, I like waiting for a little more confirmation. So we get back-to-back nice push higher, right? Strong bull, not a very strong bull. A medium bull, but with a decent amount of wick at the highs. But then strong bull again, medium bull, weak bull, but they're all bullish, every single one of them. So for the first, 20, 30 minutes, it's all bullishness. So the first bear attempt is likely going to get bought. So buying into this pullback here, whether you're buying in at the close of the bear candle or trying to buy above it or waiting for the reversal up, doesn't matter. The first shot is likely going to trigger and go back to the highs. So we're looking to buy into the move to shove the market back up for at least one more chance. Now, we get back up to the highs after this little pullback, and we run into a little bit of a problem. We continue to ping off of the highs here, right? We form a near miss of the highs, and then a double top with a big bear rejection, and then a double top again with a really weak bull candle. It's obvious that the buyers who got in earlier are not necessarily looking for the high of day anymore. They may just be looking to get out ahead of this double top. And in this type of scenario, it makes a lot of sense, right? It's very weak. That's pretty obvious. So if we do get some movement to the upside, it's probably going to be short-lived. The market pops its head just outside of that high, one tick, and then immediately falls right back apart. So a very bearish candle to kick things off. Now again, this is still a bullish move, and although it's very weak on the highs, trying to pick the top of a move is going to be difficult. So we do have a red arrow here because this is where sellers will begin to start selling. We have a range. You're selling very low to the range. You're better off waiting for a better entry or skipping it, or if you're a scale-in seller, then you just scale into it. Now, if you were able to catch the sell off of the highs, that's a different story. That's a beautiful sell, but you have to be reading it contextually, understanding the psychology behind the moves and the nervousness of the buyers. Going counter trend is always much more of an uphill battle than is going with the trend. Now we get a pullback to the moving average, and we get a mid-peak trap. This happens very commonly. We have a push down, a nice push up, a mid-peak, which is higher than this low over here. They get a nice little bounce, and they trap that low right there and then fire right back up to the upside. That is a bullish clue that the buyers are at least gunning for that high once again. They may not make it, and it does appear as though we're putting in a little bit of a ceiling here. And you can see all of those closes and opens stacking up in the same place. None of these candles were able to get above it. So that is an area where the buyers may choose to exit, and that definitely looks like the case. They got a nice drive higher, nice consecutive bullish movement as well. Strong bull, doji, strong bull, weak bull. So you're seeing the buyers really stack into this pullback. But when it comes up and hits the top here, can't close past it, shows bearish rejection. The buyers give it one more shot and fall apart again. Now we have a clue that this is a range, and we may be trying to expand down to the overall lows. So another finalized nice little sell move there at the end of the morning session to finish off the drive down. And just a great day of trading on the bonds. We're finally getting some movement today across the board. We did see a couple opportunities throughout the market today versus the last couple days where it's been few and far between and really slow. Today was a little bit bit better. So fingers crossed as we go into February, the volatility continues to pick up a little bit more than it has been over the past couple days. So overall, great day combining the market psychology along with technical analysis, and can't really ask for much more than that. So hopefully you learned something, hopefully you found it useful, and we'll see you next time.